Hello and welcome to the Budget Briefing, your guide to Budget 2023 with me, Sorcha Corcoran, in association with EY Ireland. In this two-part series, I'll be joined by tax experts and economists as we look ahead to and review what the government is planning for the nation's finances next year. And what a turbulent time it is, with so much uncertainty still ahead in relation to the energy crisis, the cost of living, inflation, and indeed the spectre of a possible recession. I'm delighted to be joined by economist Jim Power, plus Kevin McLoughlin, EY Ireland's Head of Tax, and David McNamara, EY Ireland's Director of Economic Advisory Services. You're all very welcome to the show. And Jim, let's start with the cost of living crisis. What is the government likely to do to address this in the budget, and how is it going to pay for it all?
Three issues are likely to dominate the budget. One is the cost of living, and that's certainly top of the political priority list. And I think housing and childcare will also feature prominently. But in terms of the cost of living issue, I mean, we've obviously seen over the last 12 months a remarkable escalation in inflation. And it's not just an Irish phenomenon, it's happening all over the world at the moment. We had the legacy of COVID and the supply chain issues that it created. And of course, that has been dramatically compounded by the Ukraine war since February 24th. Politically, it is most definitely top of the agenda. We're led to believe that the overall budgetary package next week will be an increase of around 6.7 billion. Okay, and that's just over 1 billion in tax changes and 5.7 billion approximately in expenditure increases. And then on top of that, there is going to be a package of one-off measures to address the cost of living. And initially, 2 billion was being mooted. Sinn Féin wants 3.8 billion. The likelihood is it's going to be somewhere around 3 billion of one-off measures to address the cost of living. And I think it's going to be a pretty varied package. There will be an element of targeting these specific sectors and segments of the economy that are under serious pressure. And then there will be a universal element to it. And I suspect the universal element will revolve around credits on electricity bills and so on. And then the specific targeted measures will be, looking at people on social welfare already, maybe giving them an extra month's social welfare or a doubling up of child benefit, whatever. So specific measures targeted like that. But in overall terms, that's the sort of package we're looking at, around 3 billion to address the cost of living. And it certainly raises the question in my mind, the level of expected government intervention in the economy over the last couple of years has increased dramatically. And there is now a sort of a political populist narrative out there that every single problem we experience as individuals or indeed as businesses, that government is expected to intervene and bail us out.
Jim, yeah, I see where you're coming from. Then could I bring you in there, David? I mean, as Jim said, we're looking at global issues here. Can you just paint that picture for us? What's going on globally, and how should that be taken into account in the budget?
Yeah, and Jim gave a very good, succinct outline of what the government are planning to do. And, just to add to that, I mean, it's very much a continuation of the trend of what you might call emergency budgets. And at the start of the year, perhaps we all hoped we'd moving back to a kind of a normal period, the budget could maybe focus on those long-term challenges and opportunities. It hasn't worked out that way. So it's very much about the here and now and supporting households and businesses through what could be a difficult period. The international context is very volatile, and what I would say is economic forecasts in generally have a lot of uncertainty attached to them, but even more so in the current climate. We really don't know what the impact on energy markets will be globally, and how that will play out over the next few months. So the government needs to be quite nimble in terms of the policies and the measures that it outlines in the budget, and it may need to change course over the next few months as conditions change. Another factor I think to mention as well is the ECB and what role it will play in the Irish economy. And I think if you look at the ECB, they're playing catch up now versus the other main central banks. And we're looking at a very aggressive rate hiking cycle, and that will impact on people who have borrowings, people, for example, with tracker mortgages, but also the propensity to save in the Irish economy. And that will take some of that heat out of the Irish economy. And actually, it gives maybe the government a little bit more scope to be a bit looser with its fiscal policy. But the ECB is another big unknown, and it looks like they're going to hike rates quite aggressively in the next few months, and that will have an impact as well on the Irish economy.
Okay, and in that context, I mean, we're looking at dampened domestic demand, and there's a huge effect on business here. Kevin, can I just bring you in here in terms of how business can be supported in the budget? Are we looking at the possibility of something similar to the COVID-19 supports, which were, I suppose, blanket in their approach? Do we need something more targeted? And what are your views on that side of it?
Yeah, I suppose it will require a different response, I think, in terms of the specifics. I mean, COVID was very much around trying to kind of warehouse tax liabilities. It was essentially to provide subvention to keep people on headcount, if you like, and avoid redundancy situations, and to kind of support in terms of, again, direct subsidy for people who continued to work. I think I would imagine that this time, there'd be very little actually from a tax perspective that is aimed at business. I think it'll be probably more looking at the kinds of measures that Jim and David have talked about, which are fundamentally trying to address cost. And I would say for businesses, and obviously it varies by sector, but I think particularly looking at the increases in energy costs. So again, while it's hard to know at this stage what form exactly that might take, but I think if you asked business where their biggest increase in cost has been in recent months, and there's plenty kind of anecdotes around this in the media in the last couple of weeks, it is in the energy space. So I would imagine that what you'll see for businesses is targeted at energy costs particularly, and probably sectors where they're more energy intensive than others.
Okay, and Jim, are we looking at, can you share what you believe to be the pros and cons of a price cap on energy prices, for example, which the government has said they are looking at? They're not ruling out anything. The UK, that's what they're doing. What do you think? What are the pros and cons of that approach?
Well, I guess the biggest pro for an energy price cap would be it creates certainty for businesses and for households. I think the negatives, in my view, far outweigh the positives, because an energy price cap is basically akin to signing a blank check. In recent history, Ireland has done that once before with the bank guarantee, which ended up costing a lot of money. I think an energy guarantee or price cap, an energy price guarantee, is akin to signing a blank check, because we have no idea what the financial liability might be. As David said, we're in an incredibly uncertain global environment, and energy supply and price is clearly front and central of that uncertainty at the moment. We have no idea really where natural gas prices and supply will go over the coming months. And obviously that feeds in directly to all energy costs. So massive uncertainty. With a price guarantee, if energy prices fall, which we'd like to see happening, then the financial liability for government is very limited. But if energy prices get higher and become even more volatile, well, then the fiscal cost for government is absolutely massive. And on balance, I would believe that an energy price guarantee would be fiscally irresponsible. It would be exposing the Irish exchequer and the Irish taxpayer to a fiscal liability that is unquantifiable at the moment. From a populist perspective, it sounds great, but I think the economic and fiscal reality of that are very, very different.
Okay, could I bring you in there, Kevin, on the corporation tax side of things? We've had a surge in corporation tax. What are the issues we should think about there? What should that be used for? Should it be put away for a rainy day? Should it be used for one-off measures?
I think there's a couple of things for me on that, Sorcha. I think one is obviously that, the government is in a position, I suppose, to look at the budget spending on the scale that Jim talked about at the start. largely because of probably a surplus that has been unexpectedly much higher than I think probably most analysts would have predicted. There is definitely kind of a question as to there's two questions probably linked to that. One is the broader question, which is not a new question, which is around the longer term sustainability of those levels of receipts, particularly in the area of corporation tax, which I can come back to in a minute. And the second question, which is probably more around the kind of the economic budgeting piece, which is what should you do if you're going to run surpluses of that significance? And there's always a question for me within that. Somebody who's been involved in the tax space for a long time, we have a long history of one-off temporary measures which never leave the statute book. So I think people will understand a kind of I suppose a pressure to use some of the funds to deal with what might be seen as a temporary or short-term challenge around energy or inflation. But I suppose it's anybody's guess really at this stage how long either or both of those crises are going to last. So there's always a risk, therefore, I think, that whatever gets announced next week becomes effectively permanent, such that surplus then effectively is being spent on something that becomes part of the permanent cost base of the state, rather than necessarily something that will, again, if the crisis abates, we'd be in a healthy surplus situation again next year, where potentially you might look to spend that money on other things like infrastructure or perhaps debt reduction or other matters like that.
David, I mean, there are long-term challenges facing Ireland and the world, obviously, at the moment in relation to climate change and so on. And as we mentioned earlier, this budget can't look at long-term challenges, but still we have to bear them in mind, don't we? I mean, for example, the green agenda, the climate change side of things. Can this be sort of addressed at all in the budget, or any long-term considerations?
Yeah, I think the budget, which is, I suppose, a kind of annual jamboree, call it, where we discuss it before and afterwards, and policymakers and politicians announce their measures on the day. Many of them are well flagged in advance. Some are surprise measures. That's probably not the space for kind of well thought out long-term policies. What I will say is that on the climate side, we have a climate action plan, which is well understood and is now being rolled out. But if you look at the analysis by the Irish Fiscal Advisory Council, what they're suggesting is we actually haven't costed that fully, and how we'll actually get to net zero by 2050. How do we reduce our emissions by 51% by 2030? This will involve a fundamental shift in our economy and our society. And going back to Jim's point about at the start about government solving everything, in this particular case, the government can't do everything. It acts as a catalyst. And the catalyst in this budget will again be a rise in carbon taxes. It may also look at other measures, such as I've seen IBEC have suggested a green VAT rate on certain goods and services like solar panels, etc. But it can't do everything. And I think in the long term, we need to look at the huge amount of savings that are held in the household sector and the corporate sector, and actually how do we crowd in investment by those sectors in green technologies, in the energy transition. And I think it's really important that the government gives that signal through continuing on its path of increases in carbon tax over the next few years and other targeted measures, and also laying out the cost of getting to 51% by 2030, because that's the big medium-term challenge that we face.
Okay, and another topic that you expect to come up in the budget in a big way, Jim, is housing. What are your thoughts on that at the moment in terms of what might be said in the budget?
Well, every budget night, I scratch my head and ask myself the question, what is housing policy in Ireland? Because we get policies put in place, and then on budget day, there are changes made, and it becomes utterly confusing. But there are a few elements in place now for the housing market, the Help to Buy scheme and some other schemes. Okay, so I think the government should leave well enough alone and see how those policies work over time. I think the key focus in relation to housing in the budget, there may be some measures introduced again to try and incentivize housing supply, but I think the main focus is likely to be on the rental side. And in relation to the rental side, there's one key trend that has become very evident since the introduction of the rent freeze zones, or the rent control zones. And that is, we've seen a massive exodus of private landlords from the market, and the market is becoming increasingly dominated by institutional landlords. And okay, I firmly believe that institutional landlords do play and will have to play a very significant role in the provision of rental. But I also think there has to be a space in there for private landlords, because there are certain parts of the market, not least geographic parts of the market, where institutional landlords will never supply rental property. So that's where the private landlords come in, and they, as I say, are exiting the market because of regulation, because of the tax treatment. So I would expect some measures to be introduced to try and, number one, retain as many private landlords in the market as possible, and secondly, to encourage new private landlords back into the market. And so maybe special tax credits, for example, could be one way of doing that. But I think you will see a significant focus on that private rental sector, because that is clearly one of the areas where we are seeing significant market failure at the moment. And you might ask the question, okay, what's the problem with private landlords leaving the market? Because if they're leaving the market, they're probably selling their properties on to owner occupiers. So the stock of housing isn't changing, and that's true, but the stock of rental housing is reducing as a result of that. So the housing market is a series of different components. You know, there's social housing, there's affordable housing, there's owner-occupier housing, there's rental housing. And I think that there has to be a holistic approach to all of those parts of the market. And as I say, the area where there is obvious market failure, in my view, at the moment, is in the private rental sector. So I would expect that to be the key focus of the budget.
Yeah, and David, you have some thoughts on this as well in terms of what needs to happen with housing. Let us hear what you think there.
Yeah, I think Jim's right. I think we've seen a lot of policy changes over the last decade. And if you think about the multitude of measures which have been introduced, the key focus should be on increasing supply across all tenures. There is a plan in place, the Housing for All plan. It's been there for a short period of time. So I think we need to let that bed in and see how that works over the next couple of years. And I think that, market participants, builders, investors, homeowners, renters need certainty. And funding is certainly not an issue. The government has put a huge amount of funding towards housing over the last couple of years. It's really about implementation. So if measures can be looked at which look at issues like viability or reducing costs, potentially there's scope there. But as I said, the budget cycle is probably not the place to be looking at fundamental shifts in housing policy or other policies. It's about introducing the policies over a long period of time and then making changes in the budget which reflect those policies. So I think that should be the focus in this budget.
Okay. And Kevin, I mean, inflation is obviously playing a huge part in this in terms of housing and the cost of materials and so on. So it's something that there's an awful lot of uncertainty around. But can you just talk us through the actual tax side of this budget? I mean, it's what we're looking at, $1 billion, isn't it, likely to be focused on tax, and that's proportionately lower than normal. Can you just talk us through what you see happening there on that side of things?
Yeah, I think it's probably been a theme of recent budgets, Sorcha, that actually the tax element of the overall budget spend tends to be the minority part, if you like. I think this year that's going to be particularly exaggerated because I think again the numbers that Jim has talked about. I mean, the tax element of that is relatively small. At $1 billion doesn't seem like a small number, but actually in the context of 8 to 9 billion of spend, actually it is a minor part in it. And I suppose we're not expecting anything particularly radical. I think on the tax side, again, I think what you can probably expect here is measures that are aimed at trying to put cash back into people's pockets. I think sometimes the challenge with tax measures is that it's difficult to target them exactly where you want the cash to end up. But I think the things that undoubtedly will be looked at would be perhaps some increase in the tax band. So that's effectively the kind of rate at which people move from the 20% rate to the 40% rate. I mean, in effectively, arguably without indexing those bands, you're raising more tax. So you'd expect to see probably the bands increase and perhaps by more than they would do in a normal budget. You could potentially see some increases in personal tax credits, albeit, in recent years they've been very modest. And you might see something that's targeted at kind of further efforts to take lower earners out of the tax net. So increasing the limit, if you like, above which people would actually pay tax. I mean, there's a couple of other things that are hanging out there. I think one is, again, the 9% rate of VAT on hospitality is due to kind of expire. Again, I think the feeling at the moment, at least, is that will go back to the standard rate of VAT for the hospitality sector, which would be 23%. No doubt that sector will argue that they're facing increased costs in terms of energy and more generally. So they would be agitating for that to remain in place. And then again, we're being in a kind of a temporary situation as far as some of the taxes on fuels have been concerned, which again are due to run out around about October time. You'd imagine that they will likely be extended in some shape or form. Other than that, I mean, there's lots happening internationally from a policy perspective. It'll get a reference, no doubt, on the day because it's important from an Ireland Inc. perspective. But again, I think there's unlikely to be anything there around, let's say, that the so-called BEPS 2.0 agenda that hasn't already been out in the public domain and aired quite extensively so far. And the only other thing that, again, links back to what you talked about before is at an EU level, obviously, there is a draft, a proposal, let's say, which is to come in the form of a draft directive later this month around actually kind of potential windfall taxes on energy or price capping. So, but again, we haven't seen any of the detail in that, and I don't think the detail of that will be released on budget day either.
And bearing in mind all you've said there, Kevin, David, how does Ireland compare now at the moment internationally in terms of the position we're in? We're all dealing with global issues, but are we much worse off or better off than other countries in Europe, for example?
Yeah, it's interesting. I think that it's easy to get lost in doom and gloom, and it's been a difficult and very uncertain few months, and it will be an uncertain winter. The IMF did a very interesting analysis recently where they looked at the cost of living increases across all of the wealthy countries, including ourselves. And what that shows is that this year we're middle of the pack. So we're not the worst. And if you look at the bottom of the ladder, the UK economy has seen significant increases in households' cost of living, or costs of living, So we're middle of the pack. We're not the worst, we're not the best either. I suppose the big uncertainty is that we're very much a price taker in energy markets. We import a lot of energy. So that brings its own level of uncertainty. And as I mentioned, the international environment is very uncertain as well. What's happened over the last few years, and going back to the corporation tax issue, is that we've had unexpected surprises in corporation tax driven by a couple of large multinationals in the tech sector, in the pharmaceutical sector, and that's been very beneficial to the economy. Throughout the COVID-19 period, we saw income taxes actually increase, which is completely unexpected. We saw corporation tax increase significantly. The risk is some sort of shift or structural change in those sectors then reduces that tax take that we're bringing in every year. And as Kevin mentioned earlier on, if we use those excess corporation tax revenues to put into permanent increases in core spending, capital, and current, more importantly, then that's a bigger risk in my mind in the medium term, is what happens to that corporation tax take, then that short-term risk, which we're all now facing and we're seeing in our daily lives from the cost of living increases. So that is a huge risk to the Irish economy in the medium term. And I think we need to be looking at ways of banking those excess revenues, putting them into a renewed pension reserve fund or a rainy day fund while those excess revenues are in place. So huge amount of uncertainty in the medium term.
Well, thanks so much, David. Uncertainty seems to be the big word that we're dealing with, and we'll find out more when we hear the budget next week. Thank you so much, Jim, David, and Kevin, for joining me today on the show.
Thank you.
Thank you.
That's all we have time for on this episode of the Budget Briefing. But I'll be back next week, just after the budget comes out, when Jim Power and EY experts Kevin McLoughlin and David McNamara will look back on the Minister for Finance's speech and explain what it all means for us in the year ahead. I'm Sorcha Corcoran, and thanks for listening.